We have another zero DT strategy for you to consider, and I think at the current time right now, June 10th, that is, the past few weeks, what we've been having is these break-evens. SPX hasn't even been moving at all, and so taking advantage of making money off of the break-even should be a main focus. You know, utilizing your straddles, and really, you know, your strangles are obviously going to be hitting when we're not moving at all. So here's another one to consider, where if you have a bias, but you also expect the stalling action to happen. So you expect the stalling action, but you think, all right, well, if we do break, we're going to be breaking to this side. So here's one of the trades that you can consider. This is a broken condor. So if you don't know the structure, in these cases right now, you're going to be buying an at the money call or put, selling the next two strikes out, and then you're going to be capping it. I like using 1,000 just because it really gives me that, you know, 10% back on the what I'm risking here. So I usually go about 15 strikes out from that last sell point. So an example of this right here that you're seeing on your screen, it's going to be buying the 42.35, selling the 42.40s and the 45s, and then buying back the 42.60s. So what this does is when I structure this trade, it says it allows it to go up a little bit. It allows it to go up by about 10 points. And in this current market condition, that's all it's been doing, right? It's been going up about 10, fading back to break even, going low about 10 points, then fading back up to break even. So great. That's fine. It's exactly what we want. So if it does break down and it goes, and I lose money on this, I'm only going to lose money on this if it goes all the way past my strikes and we finally break out of this super tight range. But it's controlled. It's controlled by the speed at which you set these broken condors to. And typically you're going to get about 15 delta or lower move on these. So it's not going to move too fast against you. But as this comes closer to expiration, you know, after that 2 p.m. mark, Eastern time, it's really going to start to pick up pace because it's forming to that blue line on your screen, and it needs to form to that expiration risk profile. So the reason why you want to set up one of these is strictly because of what's happening right now. The stall outs, the still favoring a downside risk that could happen, or if you think the other way, where you want your downside risk to be your risk, and then the upside to be your credit that you receive. The main thing is you're playing for that credit, whether you're beyond your first strike, or should say below or above your first strike. And here you're going to be making roughly about 170 credit as long as we stay below about 42.50, and that's great. That's what's been happening, and that's what you want to do. All right, so the management side of things can get a little tricky, because if you do get these breakout days and you're not expecting it, while 15 delta isn't that much to work with and it's not that scary, it can move against you pretty fast, especially if it breaks up to the opposite side. So in these cases, on the management side of things, if it does start looking like the day will end and you will be beyond your strikes on your risk side, what you can do in these cases is simply just buy back the tail end of your spread here, which in this case on your screen, I would be buying back the 42.45 and the 42.60. Now the debit vertical is what you'll be left with, where you basically have a 42.35 and a 42.40 debit vertical with a max of, you know, there's a 500 difference between the strikes and then whatever you paid for those two, and you're hoping at that point that you bought back the tail end, you'll either be at about a break even or minor loss, and you definitely won't be at that $900 loss. Now it takes active management to be able to do these, but it's better than taking that $900 loss. So, and you can do the other form of these things is the broken butterfly, which is people prefer a little bit more speed, which is why they do this, and it also gives you a little bit more if you actually do pin the market. And if anybody pinned the market by saying we're going to close break even for the past 2 weeks, I mean, they're probably banking off this. And it's the same management as well too. If you have a 160 or excuse me 175 credit here, times 2 up, times 3, and the times 2 is going to be all you need is 1 day to make this back again. Times 3 is you need 2 days to make this back up on the loss, but making sure that you don't take the full hit of this, because a full hit 900 is you're going to need about 2 weeks to make this back up. So risk management is what defines all strategies and makes these possible to continue. All right, and you want to try to make sure and do your best to make sure you have no overnight exposure unless you're feeling just really confident or you are willing to accept that full loss ahead of time, because if it does break to the upside hard, it's gonna hit pretty hard there. All right, so that's one of the different strategies. A broken condor, it's all about controlling speed and adding a new stalling effect. So, and adding a bias to that as well, whether it be I believe it's going to stall, or it could go to the downside, or I think it's going to stall, or it could go to the upside. That way you can tackle two scenarios out of here, possibly instead of just going up or down. I think they're great strategies to run. I run them often along with the strangles, along with the straddles. It all depends on how I'm feeling in the market. But it's really just about adding another tool to your tool belt to use and say and think in the back of your mind, what's volatility going to be like today? What's the overall market going to do? And then you can kind of structure everything you could possibly want based off of your own bias that you have, but still fit the overall narrative of the market. So hopefully that helps you. And if it doesn't, always make sure you just message me and I'll try to get back to you as fast as I can.